Hi there, traders. This is Brad Gilbert with the FX Market Insight for Thursday, the 10th of June. All right, now we are fully switching on into game mode. You come into the European session. We've got the ECB meeting, no change of rates forecast. We may get some odd comments out of the statement or press conference, so just hold on to your hats there. But the real focus for the market is definitely the US CPI numbers. Now, this stems from last month's numbers and the general implications that had for the Fed. They're now talking about nimble policy changes. If these numbers are stronger, it's going to push them into a corner. They're going to have to do something. Dollar will rally aggressively. If the numbers are weaker, it takes all the pressure off the Fed, pushes back the expected policy changes, and the dollar will get crunched, right? So it's a real, this is a massive fine, this is what we love the macros. It's a fine line, right? We're right at a junction. Strong it goes up, weak it goes down. If it comes out as expected, we might get a little bit of short-term volatility, but it'll end up trading sideways, and that's going to suck, right? Now, the best way to play this. Now, we've got the ECB coming out 45 minutes beforehand. So in the lead up, what you want to be doing is just seeing out of that ECB event, does Euro end up with some sort of bias, whether it's up or down? Right? That's something we can work with as we work into the US numbers, right? If it's, and the best trade will be if the Euro does have an upward bias following the ECB, well, then weak US numbers will be the best result because it's already going up and it will shoot to the top side, right? And the same at the same time, if the Euro's got a sort of downward bias following the ECB, well, the best trade is going to be through that trend line and strong US numbers, right? Just beware. If we have a downward bias in the Euro and we get weak US numbers, we're going to get a contrasting move, and that could be problematic as far as liquidity. Now, the rest of the pairs, the US dollar will be in play against a lot of pairs. Now, the Swiss and the yen, two neutral pairs, the dollar should act in line with what the data says. So if it's strong numbers, dollar goes up. If it's weak, it goes down, right? So that those two pairs. And I'm focusing on Swiss and Euro because some of these other pairs have other weird things going on. The RBNZ have been in play. The Bank of Canada, again, come out and reiterated yesterday that they're going to stick to their new plan. But oil's been hitting around above $70. That puts downward pressure on dollar CAD, whereas the move at the moment is up as far as the dollar goes. So that could be a bit of a tricky one. The Euro is just a prime target. But focus on the pairs that have good trend lines. That's where the easiest answer is going to be. I'm looking at Euro because we've got the ECB leading up to this event, right? So that's where the action is going to be. And, I think this is one of those ones where we've been waiting for opportunities for ages, right? You get a situation, and this build up isn't just right on this number. It's been the last 2 months of data. It's been the Fed meetings. It's been the non-farm payrolls. It's all pushing into this number, right? Really strong numbers up, really weak numbers down. The tricky part to trade and manage is the numbers in between really weak and really strong, right? If it comes out right as expected, you know not to do anything. But if it comes out, say, 3.2%, and so 0.5, it's weaker. Is that going to be enough to really push it hard? I think we'll get a bit of a move, but we're not going to get the big one we're dreaming of, right? Ideally, the best move here is pushing the Fed into a corner, and that's strong numbers, right? The Fed will have to come out with clear policy changes because they can't let inflation go to 5% or 6%, right? Just on the hope it comes back. They will actually have to do something. That's the best trade, right? At the same time, if we get like numbers coming out like 2%, well, the dollar's going to fall dramatically because it changes and takes all the pressure off the central bank. So it's a pretty clear-cut situation, one that I believe you need to be looking at closely and get ready to take advantage of. It's all on the line today, guys. Cheers. All the best.